SANDHAN, All Gujarat Integrated Classroom.
સેટેલાઇટના માધ્યમથી જોડતી કડી એટલે સંધાન.
Good morning, friends. Today I'm going to take a presentation on a topic, Auditor's duty regarding depreciation. This topic is a subtype of the main subject, auditing. The students who are in third year BCom, as well as the students who are doing professional courses like chartered accountant, company secretary, they learn this topic, auditor's duty regarding depreciation. So, this is a subtopic of auditing. Mainly you learn this in verification and valuation of assets. At that time, the depreciation topic is there, and how the auditor verify and vouch different documents regarding the depreciation that the company has or any firm has calculated. These are the contents which I am going to take in this presentation. The meaning of assets, mainly the fixed assets, types of fixed assets, and very important, valuation of fixed assets. Then the depreciation. The depreciation meaning, the causes of depreciation. The next, objectives of depreciation, methods of depreciation, basis of depreciation, provisions regarding or provisions of Companies Act 2013 regarding depreciation. And the last, I will cover what are the auditor's duty regarding depreciation, that what auditor has to look into regarding verification and vouching of various documents, and mostly regarding depreciation, that how the firm, the company has calculated a depreciation, whether it shows a true and fair view or not. Dear students, as you know that you have already learned in first year and second year the types of assets. But here let me go in deep to know the concept of depreciation very well. Assets. Mainly there are three types of assets: fixed assets, current assets, and fictitious assets. Fixed assets. Fixed assets are further divided into three parts or classified into tangible assets, intangible assets, and vesting assets. Now, what is tangible? Tangible assets which can be seen, which can be touched, like plant and machinery, furnitures, fixtures, huge machineries, etc. Intangible assets. Intangible assets which cannot be seen, which cannot be touched, but the valuation is equally important like tangible assets. For example, goodwill, patents, copyrights, trademarks, they are intangible assets. And vesting assets. Vesting asset is also one of the part of fixed asset. Vesting assets like natural resources, minerals, mines, quarries, they come under the category of wasting assets. The valuation of wasting assets are same as equally important. How they are shown in balance sheet at cost price at what value they are shown in a balance sheet. And other assets, current assets. Current assets like inventories, debtors, cash, etc. and fictitious assets. The another name of or other name of fictitious asset is the expenditure or miscellaneous expenditure up to the extent it is not written off. They are shown in balance sheet, and year by year when they are written off, they will not remain in balance sheet. The example of fictitious assets: issue of shares or debentures at discount, preliminary expenses, huge research and development expenses, underwriting commission, etc. As we are going to, or as I am going to take depreciation. So why it is important? Why the valuation of these assets are important? Because I will cover that later on. Based on tangibility of the assets, the depreciation is calculated and it is valued in balance sheet. So that's why the types of assets are equally important to know. So based on the types of assets, these are the valuation criteria of various assets. First, fixed assets or tangible assets. The tangible assets shown in a balance sheet at cost less depreciation, or we can say that at historical cost. So here the question comes regarding calculation of the correct depreciation, because the tangible assets like land and building, especially building, because we generally see that the land is appreciated, it is not depreciated. So the building, the huge machineries, furnitures, fixtures, they are tangible assets on which we calculate depreciation. So these assets shown in a balance sheet at book value or cost less depreciation. The next is intangible assets. Intangible assets are shown at cost, but it is to be written off over number of years. Goodwill, patents, they come under this category. They are shown at a cost price. The next is wasting assets. The wasting assets, they are shown in balance sheet at cost less depreciation. But again, over number of years, it is amortized or to be written off. Next is current assets. The current assets are shown at cost or market price, whichever is less. So the cost price and market price of the assets are compared and then they are shown in a balance sheet. The next is fictitious assets. The fictitious assets are shown at actual amount, whatever spent or whatever expenditure made, and again it is written off over number of years. So in our topic regarding depreciation, why this valuation is important? So as you know that depreciation word comes only in tangible assets and in wasting assets. As we have seen in last slide that the valuation of various assets apart from tangible assets and wasting assets, there is no depreciation calculated. Current assets, cost price or market price, whichever is less. Then intangible assets, again they are shown at cost price. Fictitious assets, they are shown at actual amount incur. So only the question comes regarding calculation of depreciation in case of fixed assets, tangible fixed assets and vesting assets. So the next slide is regarding the meaning and definition of the depreciation. So now the main topic, depreciation. What is a depreciation? Depreciation is a gradual and a continuous decline or a reduction in the value of the assets, especially of the book value of the asset, due to wear and tear, due to obsolescence, accident even, efflusion of time, etc. Due to this reason, there's a reduction, there's a decline in the value of the asset. As the asset which is used in a business for continuation of a business cycle, for running of a business cycle, the assets which are permanent, which are not temporary, which are not for a sale, such assets are depreciated. Such tangible assets are depreciated. So that's why the word depreciation comes. What is the definition of depreciation? Depreciation means a gradual conversion of the cost of fixed assets into expense is called a depreciation. Or we can say that permanent decrease in a value of an asset through wear and tear in use or passage of time. As I have already discussed that fixed assets, fixed tangible assets, they are used in a business for a permanent basis, not for a temporary basis. And the objective of acquiring fixed assets is not for a sale, for a use in a business for a longer time period. So as they are used in a business for a longer time period, they are obsolete. Obsolescence is there, obsoleted. Efflusion of time, passage of time, wear and tear. These are such reasons through which they will not used in a same condition over number of years for a longer time period. Due to this reason, the depreciation is calculated. What are the features, characteristics of depreciation? Depreciation is a fall, a shrinkage in the value of asset. Say for an example, in the year 2014, one of the fixed asset, a machinery, is purchased at a price rupees 13 lakh. We cannot say that over a number of years, while permanent using this fixed asset, the value of this 13 lakh rupees will remain the same. Year by year, the value of this asset will get reduced, will get diminished, decline. So, it is a value that is reduced in the asset, that is a depreciation. That is a fall, that is a shrinkage in the value of asset. Fall is in the book value of asset. So what is a book value? Acquisition price, cost price or a purchase price minus depreciation, that is a book value of an asset. that in balance sheet, the fixed tangible assets are shown at book value. So every year the depreciation is calculated and it is deducted from the acquisition price of the asset. Decline in the value of asset is permanent in nature. Once it is reduced, it cannot be restored to its original value. So the depreciation is a permanent. It is a continuous process. Once it is reduced from the value of the asset, it is a permanent. The value of the asset will not be higher in a future. That will always decline. The next is a gradual and a continuous process. It is not a sudden. As year by year the value of asset is declining. It is used in a business, so every year the depreciation is calculated and it is a continuous process. It is not a process of valuation of asset. It is the process of allocating cost of an asset to its effective life. It's very important feature of depreciation. Here the reason why we calculate depreciation. So to calculate depreciation is not to value a fixed asset, but to keep a separate amount every year to replace a fixed tangible asset over number of years or in a long period. Every year, certain percentage of assets or amount as a depreciation to be deducted, and that is